Hi everyone, welcome to another weekly market forecast for the week ending February 19th, 2021. My name is Justin Bennett with Daily Price Action, and in today's forecast, we're going to talk about the euro, the pound, the Australian dollar, gold or XAUUSD, and we're going to wrap things up with Ethereum, which has been on an absolute tear over the last year, as you well know. But the Australian dollar is also setting up for us with a break above that bull flag that I mentioned this past week. So we're going to take a look at that, as well as where the EURUSD could be going after the recent false break. All right, so we're going to cover all of that and more in today's video. So let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. So first up, we have the EURUSD, and as you know, we did have that recent false break below that 120 area. Now, the reason I thought this was a false break for a long time is simply because the upward momentum we've had here for a while. So notice how we have these higher lows and of course higher highs. We also have this trend line that extends off of the May 2020 lows that gave us direction to this uptrend. Now, this false break right here, I wasn't interested in playing this simply because, again, the uptrend was intact. And even if we did see a dip lower, I wanted to see what happened on a retest of this resistance area. And as I mentioned last weekend, anytime you get an immediate retest of a broken level like this, so notice how we had a close below it, and the very next day shot right back up to retest that area. Anytime you see this, this is an early warning sign of a false break. And as you may well know, a false break to one side of a pattern often triggers an extended move in the opposite direction. Now, the pair did struggle a little bit after this candle here. So we came up, kind of moved sideways for a little bit. And on Friday, you can see where we formed this bullish pin bar, and the pair also retested that trend line perfectly. So as long as this area is intact as support, I do like the idea of a higher EURUSD next week. Just keep in mind that this area right around 121.60 that I pointed out last week, all right, this area right through here is going to be critical as well. So notice back here, we had highs, lows through this area, some lows through this area, and also highs. So 121.60, maybe 121.70 is going to be one to keep an eye on. If we do get a daily close above that, we could see the EURUSD move back toward the 123.30 area. Alternatively, of course, if we do see the EURUSD move below Friday's low, all right, and take out this trend line, we could see another retest of the 120 support area. The pound followed through last week after closing above 137. So this has been the area on our radar for quite some time. I always said that a weekly close above that area is what it would take to extend the pound higher. And sure enough, you can see where last week, okay, actually the week before last, closed above 137 and that area became support. So last week's follow through means that we can start looking toward other resistance areas, and one region to keep an eye on is going to be 140. So if I move back here on the daily time frame, you can see where we had a little bit of a pivot right back here in that 140 region. So 140 was significant back here. It's also a big round number, so it's psychological that you would see sellers try to defend 140. However, if we do get a close above that, look toward that 143.50 area. All right, 143.50 is the one I've had my eye on for a long time, ever since we started talking about this wedge pattern on the monthly time frame. All right, so this falling wedge hinted at the breakout. We got that a few months ago, and so far the pound is just continuing higher, and the logical target, the next logical target, would be that 143.50 area. The Australian dollar has been absolutely textbook lately. We talked about this bull flag a couple of weeks ago, and I mentioned how it could trigger a continuation of this uptrend. All right, so we had the uptrend back here. The pair has consolidated into this descending channel, aka bull flag. We got the close above that channel, and that area became support. Now notice on Friday, we did get this bullish looking candle after it retested that 77 support area. So we could see a move higher from the pair next week as long as 77 holds as support. Just keep in mind that it does have to close above 78.15 to expose that 79.30 area. So we'll see if it holds, but right now on the daily and even weekly time frames, things look pretty bullish here. You can see where this trend is very much intact, and the area between the 10 and 20s has also served as support, all right, for the last few months. So this looks really good from the weekly. And of course, the daily time frame also looks good. All right, we had that bounce from the 77 area on Friday. So again, as long as that holds, I do like the Australian dollar higher toward that 78.15 area next week. Gold, or XAUUSD, has really struggled in recent weeks. We can see where we have a bull flag that's formed since this rally from the March low of last year up here towards 2075. We had this bull flag that's formed. However, gold has been unable to break out of it. And we've just had these lower highs and lower lows. And now you can see where it is starting to lean on this trend line. Right now, that area, that support area, comes in right around $1,800. That's going to be the one that gold has to hold if it does want to move higher and break out of this channel. Now, resistance, this channel resistance comes in right around $1,900. That's going to be the area that buyers have to break in order to break free from this consolidation. If we do see a move, a close below $1,800, we could see gold extend lower all the way toward this channel bottom. And with the way things are going, I honestly wouldn't be surprised to see that. And the only reason I can come up with is that gold is literally buckling under the weight of Bitcoin. All right, we all know that it's a cryptocurrency bull market. I've been talking about it for a long time, for about the last 8 or 9 months. And this bull market is likely to extend into September, if not October. So I think that gold is going to continue to struggle over the next few weeks and months, especially if it continues to trade within this channel. All right, again, we really need to see a pop higher and a break above $1,900 for gold to do anything here. Until that time, I'm not interested in it. I still have some investments on, but they really aren't performing very well at all, especially when you compare them next to cryptocurrencies like Bitcoin. And last but certainly not least is Ethereum ETHUSD. And I want to start out here on the 4-hour time frame. You can see where we have this ascending channel, and a lot of people would see this pattern right here. Okay, so this lower level down here and this upper one as a rising wedge, which would be a bearish pattern and signal a move lower. However, cryptocurrencies are in a bull market, and a lot of times you'll see a pattern like this form only for the market to break higher, break above this level, and then take off and go on a parabolic move. And that's exactly what I think is going to happen here. I think we're going to see Ethereum break above this level and go on a parabolic run this month. Now, if we move into the 2-hour or even 1-hour time frame, you can see where Ethereum recently, just today, broke out from a small triangle pattern that had formed here in this consolidation. So going forward, I would like to see this $1,800 area hold as support. And of course, it needs to get above this resistance area right around $1,900, maybe just above it, in order to extend higher this month. Now, where could it be going over the next few weeks? And in my opinion, again, it's important to keep in mind that we are in a bull market, and that means that you can get parabolic moves from cryptocurrencies like Ethereum. All right, so if this channel is any indication, I do think that there's a very good chance that we could see Ethereum, if it can get above this resistance area right around $1,900, okay, that we could see Ethereum move higher this month up toward that $3,000 area and perhaps as high as $4,000. Now that may seem crazy, but you have to remember that Ethereum is essentially following exactly what Bitcoin did when it broke above $20,000. Okay, so this level back here, right around 1440, this area right through here was the previous all-time high. And when Bitcoin broke above $20,000, it basically took 24 days for Bitcoin to move 112%. And so far, Ethereum is following that exactly. So it broke out here. So if from here it moves 112% from 1440, that obviously gives us approximately $3,000. And if it does it in 24 days, it means that by the end of February, we could very well be looking at a $3,000 Ethereum. Now, will that happen? I don't know. I don't have all the answers. There are no guarantees. But just given the fact that we are in a cryptocurrency bull market, and given what's forming here on the daily chart, I do think that there's a very good chance that we do see a close above this trend line and a parabolic rise in the coming days and weeks. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.